Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. And in this video, I will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be covering the technical aspect of the pair. Then we will go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest hedge funds and speculators in the market are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about GBPJPY because at the moment we do have quite interesting price action and structure. In fact, starting here on the monthly, what we can notice. Now here on the monthly, we can immediately see how the market is currently testing previous monthly resistance here, again here and again here, which now that the market has broken it to the upside is turned support and demand at this area. Now, as we are testing previous monthly resistance turn support, we did expect the start of a rejection higher. And in a situation like this, we could expect more potential bullish continuation. Dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see how at the moment we are testing a very strong supply. In fact, we know that when the market was printing this very strong bullish impulse, immediately when the market tested its zone, it printed this red candle, showing very strong selling pressure all inside of this zone that is now highlighted by this wick. Now, at the moment, we are exactly inside of that wick, from which there is a good chance that the market could actually provide a rejection to the downside, since it should find some selling pressure inside of this zone. Now, if we go down on the daily time frame, what do we see here on the daily? Now, from a daily perspective, what we can notice is that the market, in creating this move to the upside, it has also printed this overextended W formation. Now, in general, after the creation of an overextended W, what you would like to see is for the market to provide a rejection to the downside to go and complete the pattern at the neckline. So in this case, we would like to see a rejection lower for at least a retracement to the 0.32 Fibonacci taken on this daily impulse, which in this case is anyway lining up with previous resistance turn support. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the pound, what we can see is that on the pound, with the last reports, net positions have been dropping. We went from minus 79k to minus 80.3k, with 400 shorts added from an institutional perspective and 677 longs getting closed. So the GBP is currently getting quite bearish. Now, if we go and see what we have on the JPY, we can see how the JPY is bearish as well. However, net positions in the short term have been increasing, which could indicate potential short-term strength of the JPY. And short-term strength of the JPY and short-term weakness of the pound is exactly what we need if we are to create this potential rejection lower. So how we could be approaching this potential move to the downside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the downside for the completion of the overextended W formation, at least to the 0.32 of the Fibonacci taken on the daily impulse. Now, if you don't know what I'm speaking about when I say shift of market environment and valid entries, that is all part of the mentorship program, which you can now access completely for free. The link is in the description and I really suggest that you go and check it out. Also, if you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.